Man, so are things worse than previously expected? We've got Bitcoin marginally flat today, but many are worried that data which has just come out, macroeconomic data, could be indicating a longer than expected pain period for the markets, not just crypto, but global markets as well. Yesterday, I shared with you guys as I was traveling. I'm now back in my studio, so much more comfortable, got the data accessible in front of me. Yesterday, I showed you guys that a lot of people were calling for this pivot. They were showing you technical charts, they're showing you price models, they're showing you on-chain metrics. But the reality is macroeconomics are not going to loosen the grip from this downturn. This bear market, this crypto winter is still well and truly here. But that also provides us with a great opportunity. We're going to go through the key levels. I'm going to explain to you exactly what new economic data literally just came out and what does that mean for markets. So smash all the likes. Don't forget to subscribe, guys. A lot of you are not subscribed. Please do subscribe. Support this channel through a bear market, and together we will make the right calls which will pay off in that bull market. I know it feels long away. I know it's tempting to kind of leave crypto and come back in when things are exciting. That's exactly the mistake I made in previous bear markets where I got shaken out by the bear market, and I regretted it hugely once the bull market came in. So as you can see here on the Bitcoin chart, you can see that we've got this nice little movement, right? We've had a couple of positive days, but we're running into our EMA ribbon. We're struggling to get this 20,000 level here in a technical perspective. You can see we're well within our channel. Our channel is between 18,700 and 22,000. We've had that channel there for a very long time. But more importantly, we're running into this heavy resistance, and this resistance takes you all the way up to 20,500 here on the daily chart. We need to see some progression here from Bitcoin if we really want to change this trend on the longer run. You guys also know that what I'm monitoring is this peak. You've got to see this peak because what's happened here is you've got a low, you've now got a lower low. So even if you run all the way up to 22,000, you're still in a downward trend. And that's what people are not understanding right now. The bears are in super control. I know I keep saying that, but I just want to make sure I drill that home because the bears are in control of this movement. If you look at the wider markets there on the right-hand side, you can see what's happening today. Bitcoin leading the way, now notching up 0.9%, and you can see altcoins are slightly following it to the upside as well. But markets are nervy. And why are markets nervy? Well, let's fill you guys in on what's going on. If we switch on over, you can see Putin continues to be doing his thing. Britain continues to be in a mess. We've covered that off at length over the last couple of days. We won't speak too much about Britain, but we do have to talk about the Eurozone. And that is because the Eurozone, which is a block of 19 countries in Europe, as we know, soars to record 10% inflation. Piling on the pressure, right? These central bankers have to get hiking. Things are not going to get easier. Remember, we're waiting for this pivot. We're waiting for central bankers to start loosening again. But what the evidence is showing is that they continue to need to tighten. They need to keep tightening, and they're still being all too soft. Now, it's not just there. US inflation, PCE inflation came in at 4.9% today. Remember, this is the preferred measure of inflation that Jerome Powell uses. And his next meeting on November the 2nd is the next meeting where he's going to announce his next interest rate hike. And that's what markets are looking towards. So if you got data coming out higher than expected, consensus was 4.7, it came in. Let me show you guys exactly how it came in. Here you go. It came in at 4.9 here, so it's ticked back up. But let me put this on a line chart. And as you can see here on this line chart, look at that. Inflation came down, spiked back up. That is worrying. I don't want to kind of create too much fear, but that is not great news. This is showing that inflation is not under control in the US. We keep thinking it is, but this PCE indication here could get Jerome Powell and the market somewhat worried. So that's definitely something to watch for. I mean, you can see the Eurozone inflation. Let me show you that on a graph. That's Eurozone inflation. Things are not looking great. We know UK is having a terrible time right now in terms of what's going on, and that is creating strength for the dollar index. Let's now switch on over to this dollar index. We know that it's leading the path in terms of what's going on with crypto, what's going on with markets, why are markets heading to the downside. And as you can see, we've spoken about this. I said very, very clearly, do not be surprised to see the dollar index retrace to its daily EMA ribbon. And look, you had 2 red days, and by all means, Bitcoin had a good couple of days there. But all it was a relief rally. It was green candles, which we are not chasing because the bears continue to be in control of Bitcoin and growth and risk stocks. In terms of the dollar index, That is now showing a green candle today. It's trying to bounce from this level. Now, whether it wants to come down a little bit more before bouncing, that's up to that. That's fine. But either way, you cannot deny the trend of the dollar index, and also you cannot deny the trend of the euro weakening. Yes, it ran into its EMA ribbon, but we called it. It's just running into its EMA ribbon, and it will face a rejection here. And you can see here, we're getting that red daily candlestick today on the euro as it's falling 0.25% versus the dollar. Similarly for the GBP, running into its EMA ribbon, the GBP running into its EMA ribbon, and I would not be surprised to see it get pushed back down to some of these levels to test some of these levels again. That means strength for the Dixie. That means further pressure for Bitcoin here. So I'm continuing to hold my bearish bias. You can see fear and greed index continues to be very low here, sitting at 21, extreme fear in the market. Ultimately, this is when we want to get to work, right? This is the moment where there could be a prolonged winter. We could get lower prices, and I'm actively scoping, looking for opportunities, trying to dollar cost average more into the market, because these are really, really interesting times, and we could be here for a while. But the reality is you will not get the benefit of the next bull run if we're not working right now. Those who do not take this opportunity right now and start buying in when Bitcoin's at 40,000, 50,000, 60,000, FOMOing in at 70,000, those are the people that will not benefit from this opportunity. So if you're in crypto right now, you've got to count that as a blessing. I know it's difficult. I know it's painful. I know the market stinks, and it's not just crypto. It's a global market issue. But this is the time to back your high conviction plays, and conviction is key. If you don't have conviction and you're buying in Bitcoin right now, close to 20,000, and then it drops to, let's say, 15, 14, you may panic sell. So only buy what you're willing to lose, only buy based on your own research and your own conviction. And right now you can see evidence that things continue to be an upward challenge here for Bitcoin. I mean, let's just tidy this up somewhat. In fact, let's go into a clean chart here, slightly cleaner chart anyway. And what I want to share with you, I want to pop off this EMA ribbon. And I want to show you the broader pattern we're in. And it's easy to forget kind of what we're in. We're in this rising, broadening wedge. And we're spending a lot of time towards the bottom half of this wedge, which is quite characteristic of this pattern. And you can see the lines I've drawn, and I've not changed them at all. All right? You can see I tweeted it probably 4 or 5 days ago, this pattern. And we've been monitoring the pattern well before then, but I shared these lines with you. Normally what tends to happen is something like this. I don't think it's going to follow my line exactly. I'm just showing it to you as an illustrative purpose, that you can get a final bounce. That would be your lower high to this high here. And then you start going back down. You fall back to the downside. You retest. And then you start falling to the downside. If you guys want to learn these technical patterns, if you want to understand what they mean, I've made it available for free. Links in description. Head on over to Skillshare. I've put the whole TA course there. Guys, this could have cost you thousands of dollars, but it's there for free. Take advantage of it. Learn what these patterns mean. Learn what the EMA ribbon is. Learn how to do Fibonacci retracements. Learn to do Bollinger Band, which I'm going to show you now as well, because they are very, very important tools in your toolbox to navigate through this winter, but also the bull market. And you're going to want to be ready for this bull market. So learn the skills now, which are going to carry you over for that bull market. So what I now want to show you is, let's take a chart like this. And this is the W pattern we've been monitoring, right? This is the W pattern, which on a weekly basis, and you can see it here on the daily chart as well, is our only way to get out of this pattern, right? It's our way to get out without seeing any further lows. So if we can hold these levels and mount an attack to 24,000, that could then give us the possibility of trying to recover. Okay, now that's our positive scenario. Now, if we bring out what I want to bring out is the Bollinger Band, you can see where we're at. The Bollinger Band is starting to constrict, which is making me believe that we could be ready for our next volatile move. Now, which direction is that going to be in? The bias has to be to the downside, simply because of what I explained, right? The macroeconomic conditions, the movement we've had in the prior. Every time it's constricted, look at this example here, we broke. It constricted, we broke down, okay? So now we need to see, are we going to get our next leg down, and what could that mean? Another way to look at this is to bring it up to the weekly chart. And if you, I know it's a bit messy here, but bear with me. If you see this from the weekly chart, we could be heading to the bottom ends of the Bollinger Band, which could bring you down to that 15,000 level. So those are the levels I'm looking at. I'm not panicking and saying Bitcoin's going to head to 8,000, 9,000. There's nothing constructive in doing that. Let's look at the data. Let's see what's being presented to us, and let's take it based on that. But more importantly than your technicals right now, I want you guys focused on the macro. Really important that you understand what's going on with the PC inflation, like I've just explained. Really important that you understand what the Fed officials are saying. We just had Brainard speak today, Fed Vice Chair, and she said the Fed shouldn't pull away from inflation. Okay, so you can take a look and you can see that markets are pricing in 53% chance of 75 basis point rate hike. I would not be surprised to see that through October at some point, I don't know when, but at some point the market will start to pick this up to price in more of a chance of 75 basis points. Because given the PC inflation we've seen, given the fact that jobless claims were also higher today, that shows that the labor market is healthy. Jerome Powell does have the scope and the room to go harder and increase rates. So definitely something for us to focus on here is how does this change? Remember, no Fed meeting during October. And that means we could have a period where we see a bit of a relief rally, but I don't want you guys getting caught up in that rally, right? These can easily be little rallies which you get a week or two positive here on Bitcoin. If I put this onto the weekly chart here, you can see that if Bitcoin has 1 or 2 positive weeks, it doesn't change anything. We're still in a huge bear trend to the downside. I don't want you guys FOMOing in and chasing these green candles. If Bitcoin has a relief rally, you've got to give respect to the bears who continue to be in control of this trend. So we'll continue to monitor what happens here in the European, UK, and US markets. Those are the things that are moving the situation right now. On top of that, we know that the Chinese economy is slowing down. We know US GDP, the revision came in at minus 0.6, so it is contracting. These are the things that's going on. We've also got the midterm elections coming up later this year. What impact could that have? Loads of things on the horizon that are worrying markets. And that uncertainty, when you package it together, is exactly why risk is off right now. And to summarize that, to show you what that then means, you just need to look at the US 10-year. That is your risk-free. Let's pull it up on this chart here instead then. That is your risk-free return. And if you look at this on the weekly chart, it's parabolic. In other words, you can leave your money in a US 10-year government bond and get 3.7% at one point. This was close to 4% on the wick this week. Up to 4% risk-free per year on your government bonds. This is hugely risk-off. People are worried about a global slowdown, not just a local slowdown in US or everywhere, a global slowdown, bringing people to a halt and really making conditions difficult. And guess what? That's what central bankers want. They want the markets to cool off. They want an earnings recession. That's the next thing that's going to come up. They want to drive the economy to reduce demand and bring that inflation down. Hope you guys are navigating this market well. If you have any questions, hit me up in the Discord. We've also got a Telegram where I put extra insights as well. We've got a members live stream. If you fancy joining that, you can also join our member live streams, ijaz.uk/member. Link is in the description. We do 3 times weekly live streams. We cover all kinds of things. We look at your favorite topic, tokenomics, look at your favorite projects, look at different technical indicators. You can ask me questions around that. What am I doing in the market? And much more. So definitely check that out. Links in the description. Don't forget to subscribe on your way out. Thanks for watching. Go watch this video here, and I'll see you in the next one.